Good afternoon. Time to have a look at what's happening from a markets point of view. We did see Asian markets rising. The sell-off that we've seen in treasuries managing to take a pause. This amid an environment of high inflation, a hawkish Fed, as well as China's COVID challenges. China's markets, nonetheless, especially the banking stocks, wavered a little bit. And this is on the back of the central bank holding its lending rate at 3.7%, disappointing investors who were hoping for some kind of stimulus to get the economy going, a sagging economy that's having to deal with the lockdowns. On the other hand, we're still dealing with the Fed president comment, especially comments coming out of the Chicago Fed president saying that he is seeing interest rates moving above the neutral rate. Nonetheless, when we look at what's happening from an FX point of view, we're looking at a dollar that is declining, a Japanese yen that is managing to revive itself following the few days that we've seen it perform a little bit probably worse than we would have expected it. One of the worst currencies in the G10. The rand managing to get a little bit weaker as well, along with the emerging market countries. But to talk to us about the latest developments, especially the global market sentiment as it stands, we are joined by Han Tan, who is the Chief Market Strategist at Xfinity. Han, thank you so much for your time. I mean, following the comments out of the IMF and the World Bank, especially when it comes to their global outlook, what is the market sentiment right now following those revised projections?
Indeed, and I hope you can hear me all right. To be honest, the IMF and the World Bank didn't tell us anything that we didn't already know, and so it is doing little by way of direct impact on market sentiment. I think as we speak right now, it's still very much the Fed's outlook for interest rates that are front and center. Of course, there is a Russia-Ukraine war that is still a big talking point as it pertains to inflation. And as you mentioned in your program earlier, there are the lockdowns in China as well. But I think ultimately very much still pertains to the Fed and its outlook for tightening policies.
When it comes to the moves we've seen around the Japanese yen, I mean, what's driving that? And are you expecting policymakers to step in and support it?
Yeah, what's driving it is the policy divergence between the Bank of Japan and really the rest of the world, or China really. If you look at the Bank of Japan, they are sticking to their ultra-loose policy settings, whereas the rest of the world appears to be in a race to raise interest rates to get ahead of that record high or red-hot inflation, right? So, and I think to your question about whether policymakers will step in, I think that psychologically important 130 level in the dollar-yen, I think that's something to look out for, because the greater the yen weakness, then the more pressure there is on policymakers to intervene, and perhaps more so on the government side, more so than the Bank of Japan. Historically, back in '98, you had to see dollar yen at around 140 for the intervention to happen. So that should provide some context.
I'm curious, in terms of events that you are keeping an eye on, what are some of those that are grabbing your attention right now?
Yeah, so as I mentioned earlier, it's still very much what the Fed officials are saying. Keep in mind that this is the final few days before these Fed officials go into that radio silence period in the lead up to that FOMC meeting in the first week of May, right? So as things stand right now, markets are pretty much fully expecting a 50 basis point hike in May. Now, looking past that, whether or not that could be followed up with a second consecutive 50 basis point hike, I think, that's what markets are trying to grapple with right now. And hopefully some of these clues could come out in a couple of days before the weekend out of the Fed speak that's scheduled.
Han, I would have loved to discuss some of the other developments that we are seeing, especially those Fed presidents and the comments coming out of the United States regarding the aggressive monetary tone that we seem to be getting from those Fed presidents. But unfortunately, we're going to have to leave it there. We're going to go back to studio where my colleague Nompumelelo Siziba is standing by to take care of the news from this particular point, and I'll be back shortly with Books on Point.